There are several paths into real estate investing, each with different levels of involvement and capital requirements. Direct ownership means buying physical property to rent out or flip. This offers the most control, but requires the most capital and effort. Real estate investment trusts, or REITs, let you invest in real estate through the stock market with no property management headaches. They're required to distribute at least 90% of their taxable income as dividends, making them excellent income producers. Real estate crowdfunding platforms let you invest in specific properties or portfolios with minimums as low as $10. Each approach has its place in a diversified investment strategy. If you go the direct ownership route, understanding the numbers is critical. The 1% rule says your monthly rent should be at least 1% of the purchase price. A $200,000 property should rent for at least $2,000 per month. Cash-on-cash return measures the annual cash flow relative to the actual cash you invested. For a leveraged purchase, this can be quite attractive. Real estate also builds wealth through appreciation, typically 3 to 5% annually, and through mortgage paydown, where your tenants effectively help you build equity. Add in tax advantages like depreciation deductions and 1031 exchanges, and the total return on real estate often exceeds what the simple rental yield suggests. For complete beginners, the easiest entry point is REIT ETFs. You can buy shares like any stock, get instant diversification across hundreds of properties, and start receiving dividend income immediately. As you learn and save, consider house hacking, where you buy a small multi-unit property, live in one unit, and rent out the others. This can significantly reduce or even eliminate your housing costs while building equity. Before buying any property, always run the numbers conservatively. Use a spreadsheet to calculate expected cash flow after accounting for mortgage, taxes, insurance, maintenance at 1% of value per year, vacancy at 8 to 10%, and property management at 10%. Only invest if the numbers work even under conservative assumptions. RS. There are several paths into real estate investing, each with different levels of involvement and capital requirements. Direct ownership means buying physical property to rent out or flip. This of